Welcome to my channel. My name is Tim Sutherland. I'm going to go over the Uniform Residential Loan Application. This is the application that you receive to sign when you have applied for a mortgage. This application took permanent effect in March of 2021. And so if you've applied since March 1st of 2021, this is the application you'll be asked to sign. What you're going to want to do is review it, just make sure the information is accurate. Some information has to be precise, others are just a picture in time based on the application. So we're going to start at the top, and you're going to take a look at it. It's going to ask for your personal information, first, middle, and last name, and the suffix. The suffix means junior, senior, the third, the fourth, anything like that. That is the suffix. Alternate names. Your lender may have picked up an alternate name off your credit report. Maybe you've changed your name, anything like that. Take a look. Make sure if it's filled in that it is accurate. Social Security number. Very important to make sure it is the correct Social Security number. If it is incorrect, it will come up further along the process, and then your lender is going to have to correct it and pull new credit, and that could change your pricing, could change your program eligibility, a number of things midway along the process, all over a incorrect digit. So you want to make sure that's correct along with your date of birth. Citizenship, also very important. Most loan programs allow all three of these: citizen, permanent resident alien, or non-permanent resident aliens. However, there are some that may disallow some for various reasons. Please know if you're non-permanent resident alien, or even permanent resident alien. Anyhow, if you're diplomatic immunity, you don't want to talk to your loan officer about it. You may not be aware. And if you do, you definitely want to discuss that with your loan officer before moving too much forward if you are under one of the non-U.S. citizen buckets. If you're on a visa, you want to talk to them, make sure they understand what visa type you have. Permanent resident aliens, that's usually green card. A citizen's a citizen. Type of credit, you are applying by yourself or you're applying with somebody. If you're applying with somebody or multiple people, how many borrowers are on this loan? Make sure the names of the other borrowers on the loan are here. Marital status, are you married? Are you separated, or are you unmarried? This is all the unmarried. Do you have any dependents and their ages? Please note, don't duplicate dependents. If somebody else has a dependents on their part of the application, do not put them on yours. Your contact information, make sure that is accurate. Your lender's going to want to reach out to you often during the process. So just double check those for accuracy. Home and cell, for most people, it's the same number these days. Your work number, right there. Most of the time, lender's not going to try to reach you at work. They're going to call your cell. So very often they just want the main line to work to your office for verifications. Email, make sure it is correct and make sure it is one that you use regularly. When people have multiple email addresses, and they might forget which one they put on here. There are a lot of emails that go on in the process. It's important to note that the email address is correct, that you're checking it daily. Number two, check your spam folder a lot during your process, because mortgage emails have a tendency to end up in the spam folder of your emails. Current address, check that for accuracy. How long have you lived there? If it's 2 or more years, you only need the one address. If it's for less than 2 years, we also need the former address. However many there may be, going back for 2 years. And then your housing. No primary housing expense. If you're living with parents, for example, own the home, or you rent the home. If you rent it, what is the monthly rent figure? Same thing for previous addresses. If your mailing address is different than your primary, put it in here. If it's not, then that would be checked off as does not apply. Same with if you don't have previous addresses. Please note a lot of the items throughout the process through the application says does not apply. Make sure they don't apply. Your lender is working on the assumption that information is accurate. If you've got something that does not apply, and it does, it can change the outcome for you. Current employment, you do want to have the employer or business name. Make sure you got the phone number in there. Make sure it's correct. And one that the lender can reach regularly, because we're going to want to verify employment, not only in the beginning, but toward the end of the process. They have to be able to reach somebody. Street address of your employer here. Talk to your lender whether they want the headquarters street address of your big company or if they want the address of the branch where you work. That's more a thing that seems to vary from one lender to the other as to which address they want put in there. What is your position there? When did you start? Start date right there. How long have you been in your line of work? Make sure that's in there. If your start date was not more than 2 years ago, then your lender is also going to want previous employment on here, and we'll get to that next. If any of this applies, it should be checked off. Employed by a family member, property seller, real estate agent, or other party to the transaction. So make sure it's checked off if that applies. If it does not apply, it does not need to be checked off. You can double check the income there. Your lender may have calculated it differently than how you calculate it. Be free to talk. You can talk to your loan officer or their staff about how the calculation was made in terms of the income that's on there. Especially when it comes to overtime bonus commissions. Some people qualify on the base. They don't need that. The lender may just leave it off. Conversely, if you're working an hourly job and your loan officer is going to calculate it maybe different than you did over an average, and you can talk to them about how they came up with the math for their calculation. Check here if you are the business owner or self-employed. And if you are, do you own less than 25% or do you own more than 25% of the company? And then what is the monthly income or loss for that right there? Very important. You have to note that because different guidelines apply in terms of whether you're self-employed or not. If you own a company and pay yourself a W-2, you're still self-employed, so just a heads up on that. Conversely, some people are one of many owners. You get that off the K-1 form. And you've got companies where it might have 500 owners, in which case everybody owns less than 1% for sure. Complete information for additional employment. If you have a second job, and you want this filled in here. If you do not have a second job, does not apply. You can check for that. The same information applies when you started, ownership, and so forth. So any kind of second employment, major, minor, that you have, includes a side business that you may have. Previous employment, you're going to want to go back 2 full years on employment, so as mentioned. The other items do not cover 2 full years. This will be filled. If they do, then it does not apply. Income from other sources. If you wish to use any of these in qualifying, to be considered in qualifying, you can put them down this section. I'm just going to list all these items right here that you can choose from. The lender may have already filled it in. Just double check it for accuracy. When you're looking at this, some of these incomes are tax-free. In other words, you do not pay taxes on it. Some lenders will do what's called grossing up, which means the figure in here may not match the figure that you get. The reason being is your lender may have grossed it up, considering you do not pay taxes on it, since most qualifying is based on taxable income. As a consequence, for example, if you get $1,000 a month in Social Security and it's not taxable, the figure here might be anywhere from $1,000 up to $1,250. In other words, your lender may have grossed it up anywhere up to 25%. Financial information right here. Checking, savings, money markets. You have the whole list of everything. Check that they're accurate in terms of the account type, financial institution, the account number, and how much do you have in there. Couple of items about the cash or market value. If the account is stocks or retirement account, things along that line. Many lenders and investors do not count 100% of the face value. For example, if you have a 401k and you've got $100,000 in there, many programs count that at 60%. So you may see a figure of $60,000 in there, 60% of $100,000. That's okay. That's how your lender is counting it. You You can, of course, double check that with your loan officer or his staff, just to firm up how they came up with the number, but in most cases, that is what it is. Same with stocks, may be counted as a percentage, just to account for the fact that fluctuations constantly. Other assets and credit you may have: proceeds from a property to be sold on or before closing, proceeds from sale of a non-real estate asset. If you plan on selling a car, a horse, something like that, make sure it's on there. There's considerable extra guidelines that go with documenting it, and if you don't have it on there, you just surprise your lender with it. They may disallow it. Secured borrower funds, generally allowed, but talk to your loan officer as to what is being secured by those borrower funds. Unsecured borrower funds, rarely allowed. So if you were getting unsecured borrower funds, funds from an unsecured source or other, definitely talk to your loan officer about it. Credits also would be in here: earnest money, relocation, rent credit, sweat equity, trade equity, all that kind of stuff may be listed in here if you're getting it. If you're getting none of it, then it's going to say does not apply. Liabilities are usually pulled over from your credit report. When lender pulls your credit report, it's going to fill this in right off the credit report. It'll have the account types, name, account number, balance at the time of the application. Please note the balance that you have now is not necessarily that at the time of the application, because credit cards, by their nature, people run them up, they pay them off, and so forth. Unless the amount is egregious, don't worry about it too much. You are free to talk to your loan officer or their staff about it. But generally, for example, of a Visa card from somebody on there, they might have $1,000 balance. At the time I pulled credit, and they'll call and go, "Oh, I paid this off." Well, it doesn't really matter. We're going to leave that on there anyhow, for the most part. We'll only address if it presents a qualifying issue, because even if you paid it off now, you're going to run it up again anyhow and pay it off and so forth. Other liabilities and expenses: alimony, child support, separate maintenance, job-related, and other. If you have any of these, they will be in here, or it will say does not apply if you don't. It's important to note that if you have one that says does not apply, contact your lender, because it will affect your debt-to-income ratio in the calculations. One item that may or may not be in here is alimony. If you pay alimony, lenders can handle it often in one of two ways. They can consider it as a straight-up liability. It'll show up here. Or they may consider it a reduction of income, in which case it may show up in the income section as a negative number, offsetting it. Reason being is generally you can, alimony is tax deductible to the person who is paying it. Note also, sorry, I'm jumping back up to liabilities. Take a look at these boxes. Are any of these items going to be paid off on or before closing? If it's checked off, yes, your lender assumes it's going to be paid off on or before closing. If that is not your plan, let them know. Conversely, if it's not checked off and you will be paying it off on or before closing, also let your lender know. So basically, make sure the box, checked or not checked, aligns with what you plan to do on your mortgage application. Financial information: either you own real estate or you do not. If you do not own any real estate, that is going to be checked off. If you do, to refinance, the refinancing property is going to be the first one listed, and then additional properties will be further down. If you're purchasing a home and you own other properties, they will be listed. If you don't own any properties, they won't. Please be sure to list all properties that you own wherever they may be. You want to make sure the address is correct to the best of your knowledge. Sometimes if you own just land or something like that, you may not have a street address for it. Try to at least have the street and the city on there. Property value: what do you think the property is worth? You want to refinance, the initial property value may be what you put on it when you applied, or what your lender thinks it's worth at that time, subject to an appraisal coming in, or if you applied for a program that has an appraisal waiver, then the value in there may be one, the value of the appraisal waiver accepted. What is your status of the property? If you purchase a home, is it sold? Is it pending sale? Do you plan to keep it? Make sure that's all accurate on there. What is your intended occupancy? So if you're buying a home, does it say it's going to be primary? If you're refinancing your primary home, does it say you intend to be primary? If you're refinancing your primary home, but you plan to move out next month and make an investment property, make sure intended occupancy is thus investment property. Basically, it applies for your intent over the next 12 months after closing. So whatever your intention is for the property from when you close for the subsequent 12 months, that would be what needs to go in there correctly. Monthly insurance, taxes, association dues, if they're included in your mortgage payment, this may be blank. If they're not, then this will be filled in. Make sure it looks accurate. Sometimes tax and insurance are included in the mortgage payment, but an HOA fee is not, in which case I'll just show the HOA. And then your lender may count rental income if applicable. Note on the property, do you have mortgage loans on this property? I'll apply to each one. Yes or no, it does not apply, means you own it free and clear. Otherwise you do. Do you have one loan or two loans? If you have two loans, make sure they're on there, even if one has zero balance. HELOCs, a lot of the information comes over auto pull from a credit report, and the lender may not pick up on it immediately at the time they write the credit or the application. And if you have a home equity line of credit with zero balance, it might not have picked up. So it's important to let your loan officer know if you do in fact have one on the property, so they can update accordingly. And then if you have one or two loans on there, are they going to be paid off on or before closing? Make sure it's checked off as appropriately. If you're paying off and closing the equity line and the mortgage, they're both going to be checked. If you plan to keep the equity line but pay off the mortgage, this is all in a refi. This will be checked, that won't, so forth. It's an equity line, credit limit would go in there. And then, of course, additional properties, or if you don't have any additional properties, does not apply. And the next one. Loan and property information. Loan right here. What amount are you applying for? Check if that looks correct. Is this for a purchase or refinance or other? What is the property address? Check it for accuracy. Make sure it is correct. If it's a refinance, you should know your address. If it's a purchase, just double check it anyhow. Make sure it lines up with your contract and address correctly. How many units is the property? So generally going to see 1, 2, 3, or 4. If you have more than 4 units on the property, won't work for residential mortgage, at which point you should talk to a commercial lender. But as long as it's 1, 2, 3, or 4, good to go. Just make sure the number of units are correct. In terms of that, if you have questions about an accessory unit or in-law suite, whether that's being counted as a second unit or as a single family with accessory in-law, you can talk to your lender, their staff. You can wait for the appraiser to come in, see what the appraiser says. Everybody has a little different way of handling it. That's something you can discuss with your loan officer. Occupancy, primary residence, second home investment, as mentioned. Make sure these are correct based on what you plan to do with the home for the next 12 months after closing. If you're buying a mixed-use property, plan to operate a business in there, yes or no? Is it a manufactured home? Yes or no? Very important. We're going to look at that. Please note, some manufactured homes don't even look like them anymore because somebody's built pretty much a house around it. I've seen that before. And looks like a house from the outside. Appraiser gets inside, takes a look underneath, sees the sticker in the closet somewhere for the HUD sticker. Whatever the case may be, and goes up, it's manufactured. It can change a lot of things about your loan process if it's not known up front. Make sure that's accurate. If you're not sure how to define a manufactured home, talk to your lender. Are you getting any other loans on the property you were buying or refinancing in alignment with this? In other words, you have two applications going on at the same time. Yes or no? If no, does not apply. If yes, make sure the information is accurate. Discuss any impact with your lender. Rental income on the one property you want to purchase, if you plan on having rental income on it, which means basically a 2 to 4 unit primary residence, or an investment property. Either it doesn't apply or it does. Expected rental, and then the lender is going to calculate. Also, gifts or grants. Lender needs to know about this because there are guidelines in terms of documenting any gifts or grants that you are getting. You can't just show up and go, yeah, my cousin gave me money toward this. It does not work that way. It could end up being disallowed. So make sure it's accurate. Here are the various forms. If you're getting a gift from a relative, different loan programs define what constitutes a relative. Talk to your lender to make sure that you're in the right bucket with that one. Anything else you also want to check as to whether they're allowed or disallowed. And then the gift types here. Have you already received them? Not yet. Source from above, how much? Declarations, you're going to occupy the property as your primary residence, yes or no? And if yes, have you owned property in the last 3 years? So you want that filled in correctly. You've owned home, or you haven't owned home in the last 3 years. How did you hold it? What type? This is a purchase. Do you have any kind of family relationship or business affiliation with the seller of property? Yes or no? Very important. Lender's going to need to know this in terms of how they address the loan. Sometimes extra requirements apply if there's a family or affiliation relationship. Are you borrowing any money for this? Are you obtaining any money from any other parties, a seller or realtor that you've not disclosed in a loan application? If yes, what's the amount of the money? Very often you may be getting a seller or real estate agent rebate at closing. That will reflect on your loan estimate, which means it's already been disclosed. So if you're not sure if the lender's aware of it or not, jump to your loan estimate, take a look and see if it's on there. If it's not, then you want to make sure that they are aware of it here. Are you going to apply for a loan on another property, not the one that we're doing the loan on or before closing that you have not disclosed on the application? Yes or no? Are you going to be applying for any new credit before closing that you have not already disclosed on the application? It's yes or no. Let us know if you plan on applying for new credit, or no, you're not going to apply for new credit. Do you have any other liens on your property that could take priority over the new mortgage, such as a PACE program or the like? Tax liens even, possibly, other type of judgments. All important to know. So make sure your lender's aware of any liens judgments you have on the property. Have you co-signed for any loans that are not on the application? Do you have any outstanding judgments against you? Yes or no? Are you currently delinquent on any federal debt? Usually applies to student loans, but there are other types too. Are you a party to a lawsuit in which you potentially have any personal financial liability? Have you conveyed title in lieu of foreclosure in the last 7 years? Or have you had a foreclosure or short sale in the last 7 years? Basically all of these would apply. So basically read them, see if they apply, make sure yes or no is correct. Have you declared bankruptcy in the last 7 years? Different chapter types right there, 7, 11, 12, and 13. It's yes or no. If yes, what type chapter is it? And this basically just outlines your agreements. When you sign your application, you can read through this on your own as you go through your application. And make sure everything is applicable when you sign. Military service. Did you have military service? Yes or no? If so, Are you currently serving on active duty? You're retired? Was your only period of service non-active member of the Reserve or National Guard? Or are you a surviving spouse? Demographic information you're free to fill in or not when you apply, and you can just review, see if it's accurate or not. Depends on how you applied. Your lender may have filled it in based on various observations. And usually that's if it's a face-to-face application or maybe one over a Zoom call. And your lender will check off how they observe this. Type of application in here was it face-to-face, telephone, fax, or mail, email, or internet. The loan originator's information is going to be here. The organization as well as your actual loan officer. Your loan officer is going to be the face of your loan application. I don't want to necessarily say that your primary contact, because usually once you get rolling, primary contact is going to be the processors or their staff. But the loan originator is the face of the loan. Their information is going to be there. It's going to have their license number. I did another video and take a look at the license number and goes over how you can tell their job experience and look that up off the license number. It'll have their email and phone number here. This information is pretty well filled out by the lender, but it'll be attached. Property loan, community property state. At least one borrower lives in a community property state or the property is in a community property state. Check that for accuracy. Transaction details, a conversion of contract for deed or land contract, renovation, construction of perm. If any of these apply to be filled in. Refinance type, no cash out, limited cash out, or cash out. One of these could be applied. Cash out means you're either taking cash out or the program is considered a cash out, even if you're not really taking cash out. No cash out means you're not. Limited cash out's basically the same thing as no cash out, just different lenders call it different things. Limited cash out general means you're getting a few bucks back, but nothing significant, and is treated the same as a rate term or no cash out. Refinance, is it a full doc? Is it interest rate reduction? Is it streamlined without appraisal or other? Will your mortgage loan finance energy-related improvements? And again, is property subject to lien? It could take priority. It's going to be checked or not. If it's not checked, let your lender know if it should be. And then your project type, if it is subject to a product homeowner association, is it a condominium, is it co-op, or is it a PUD, where the property is not located in a project. Check that for accuracy. If it's a condominium co-op, certain approval requirements are needed. If it's a PUD, sometimes additional requirements are needed, but in all cases, they have to account for the debt, the homeowner association and the debt to income ratio. So if it says not located, it's important to let your lender know. Title, how will the title be held? If you buy a house, check, make sure it's accurate as to how you wish to hold title to the home. If you're not sure how you're holding title, you can talk to your closing agent, your title company, go over the various options and make sure your lender knows. So refinance, how's it currently held and how will it be held? If you plan to keep it the same way that it was, then these two are going to match, otherwise it'll show a change. Is the property in fee simple or a leasehold? Most properties are fee simple, but there are some leaseholds. And how will you hold title? Sole ownership, life estate, tenancy in common, joint tenancy with right of survivorship, tenancy by the entirety, other. Other could be a number of things. It's important to make sure your lender knows what that is. Could be a trust, maybe you plan on doing an LLC, things like that. It's important they know because there's different ways to handle each one. Some programs allow certain things, some do not. Checked off other, sometimes be other, and they'll trust information. If you're holding a trust, it's going to be one of these two things here in most cases. And if you're in the Indian country, just check and make sure that information is accurate. Mortgage loan information is going to have the type of loan here, conventional FHA, VA, USDA, or if there's some other kind. There, please note conventional essentially means any loan that isn't one of the others in most cases. So it can be conventional conforming, such as Fannie Mae, Freddie Mac, it could be conventional not conforming, such as jumbo, and so forth. And they also check off whether you're getting a fixed rate, adjustable rate, or other. If you have any of these features, most time you will not. Balloon loans, you don't see those too much anymore. It's unlikely. Interest only, we checked off if you have interest only. Negative amortization, don't really see that anymore, but just double check, make sure that's not checked off. If you don't want that, prepayment penalty, if there is one. If not, then it's not checked off. Temporary buy down, and so forth. Proposed monthly payment is all here, and it breaks down principal and interest. There's a second loan, insurance, various property tax and HOA amounts would go in here. And then what type of lien is this? It's first lien, it's primary mortgage, or it's a second mortgage. The rate and the term. Please note, if you have not locked your rate in, then the rate and term is not necessarily that relevant because it can change. So if you see it on there, a particular rate, you want something different, talk to your loan officer. If you're not sure if you're locked in or not, go to the loan estimate. It will tell you if your rate is locked or not locked. But sometimes I get calls because the rate in there might be just whatever I had when I pre-qualified them or something like that, because they haven't locked the rate in. And then, maybe rates went down, maybe they've gone up some since then. And then they call about it and say, well, it doesn't have the right rate on it. Well, if you haven't locked, there is no right rate. So talk to your lender if you're not sure if you've locked or not. And again, if you have not, then to a certain extent that can change. This information, most of which pulls off the loan estimate. You can refer to your loan estimate for additional details. It just breaks down what's happening with a lot of your costs. It condenses some of them, doesn't necessarily itemize them the way the loan estimate does, which means sometimes the bottom line might not match precisely. For example, the loan estimate does not account for aggregate adjustments, and this form does, and so forth. Any unmarried addendum, if you're unmarried, but there's a person who's not your legal spouse but has real property rights similar to those of a legal spouse, it's yes or no, and if yes, check off the type of relationship. Hope you found this helpful, and thank you and have a great day.